Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent. Fitch ratings say global interest rate moves are becoming more divergent.
business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside. Business according to endpoints. That's Tango Delta Oscar Charlie TDOC, seeing some volume to the upside.
Shares of HP, HPQ, right now are off the highs now, 28.40 after that David Einhorn stake revealed. Hotel Papa Quebec up about 2.5% on HPQ. Shares of Penn Entertainment trading now down 3 cents after off the highs after
HP,
that
HPQ,
David
right
Einhorn
now
stake.
are
Off the highs now, 28.40 after that David Einhorn stake revealed. Hotel Papa Quebec up about 2.5%. That's Papa Echo November. Shares of Penn Entertainment trading now down 3 cents after off the
shares
highs
of
after
HP,
that
HPQ,
David Einhorn. DJT, Trump Media getting a pop here, 33.92, Delta Julia Tango. NFLX, Netflix. Steve Weiss buys more Netflix. November Foxtrot Lima X-ray.
So noting the S&P 500 extending declines now, down 0.6%. And keeping an eye on the dollar as well. It's trading pretty volatile today. Dixie's up around 2% though. So the world's biggest bond market is coming under pressure. Wall Street gearing up for another large sale of treasuries, and that will determine whether a turning point is in sight for this year's sell-off. So treasuries are falling ahead of the $70 billion sale in 5-year notes, which is a record. Demand for a massive 2-year debt sale, which was yesterday, was rock solid, with many traders unsure about the market's ability to absorb all of the supply, although considering the more hawkish Federal Reserve signals earlier this month.
Ticker ROIV, Romeo Oscar, India Victor. Sure seeing a spike in activity. No CNBC mentions David Einhorn has taken a long position in ROIV.
Hey folks, hope you're having a good trading day so far here. Certainly been an interesting reversal from earlier. Saw market bid up pre-market. We had a bit of a pop. We'll kind of zoom out and take a look at what all happened here. But you can see that when we got that durables data, which was a little bit stronger than expected at the headline, we had a bid. We sold into that. Then we had another bid post market open. And then it's just been selling. It's just sort of distributive pressure ever since. So it does seem like this is a market that continues to look at interest rates with some degree of concern. We do see rates rising, particularly on the longer end of the yield curve today. I think that is a concern that has the market's attention. In about 20 minutes here, we'll have the results for the 5-year note auction, which is coming right up. It basically completes around 1 p.m. and then we get the data just a couple minutes after that. And this is a week where we have some pretty decent sized auctions. The 5-year note auction today is $70 billion in size. So it's, it's a reasonable sized auction. Now, yesterday's 2-year was great. That was a solid auction across the board. We saw a good bid to cover. We saw no tail. And we saw a good indirect take. So I gave that auction a B. When I talked about it on the Traderade Discord, I think that today's auction is going to be important because it's a little longer duration and the appetite for that issuance hasn't been quite as strong. We did have a decent 20-year auction, but that was such a small amount and such a sort of less, I would say, well-subscribed part of the curve that it wasn't too surprising to see that be a little bit different than what we saw earlier with the 10s and the 30s. So we'll be paying attention to the 5-year note auction, see how that goes over the next 20 minutes here, because of course we'll be able to see the reaction too. We'll kind of monitor that reaction in 10-year note futures. I'll also see if I can bring up the 5-year. Give me 1 second, since it doesn't hurt to get the reaction, the instrument in question. And that's going to be ZFM4. So give me a second to add a chart for that and clean it up. Oh, yeah, and I've got to do that through, it's probably going to be CBOE. So let me use a different, it's CBOT, actually. So here we go. And then we got to give it a moment to pull some historic
Fed
data.
bids for 5-year notes total $333.6 million.
All right, so here it is. Just give me a second to clean it up a bit. So for those tuning in, this is the 5-year note futures as viewed through Bookmap. And I'm just quickly cleaning up the chart. There we go. And let's just zoom this out a little bit just so we have some context going into the auction. There has been a bid off the lows in this one. You do have a pretty decent order book. This thing has an order book depth of over 200,000 contracts here. And I'm just going to take a look at a couple settings here just to see how everything is configured for this particular chart. Yeah, I just want to make sure we include all available price levels here in the depth. All right, that's great. So we'll come back to this one. I'm just going to drag it over so it's closer to the 10-year note contract. When we get to the auction, we can look at how they both react. Right, so that'll be just right here, right before the 10s, we'll have the 5s. Let's go back to the S&P 500 futures. Still seeing some selling there. We're also seeing interest in lower levels. The second most active options contract building some interest here around 50.76 on ES. And you did hear correctly across the wires that the Fed did bid on that 5-year note auction. It bid about $333 million. Now, it is a $70 billion auction, so that is a drop in the bucket. This is not stealth QE. Instead, what the Fed is doing is just slowing the rate of roll-off for those 5-year note maturities on their balance sheet. If you look at the way QT is structured, they have caps for various maturities, and so they do occasionally come back into these auctions to rebuy to make sure the roll-off isn't too fast versus their goals. And we do see just further
Kevin
pressure.
Simpson on CNBC buys J.P. Morgan, Julia Papa Michael.
BXMT, ECPG, NFYS, FFIE, OJ, STCN, 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 NIC, VPL.
Kevin Simpson buys more J.P. Morgan. That's Julia Papa Michael.
Figure HCP Hotel Charlie Papa headline: IBM is said to offer $35 a share for HashiCorp.
HCP and IBM said to offer about $35 a share for HashiCorp. That's Hotel Charlie Papa.
IBM
Shares are halted on a circuit breaker now. That's Hotel Charlie Papa HCP. Again, IBM said to offer about $35 per share for HCP.
In 10 minutes' time at 1 p.m. Eastern, the US sells
Shares of
$70 billion
HashiCorp
in
halted at
5-year notes.
31.31.
Prior bid to cover 2.41, prior high yield 4.235%.
Matches yesterday's high.
So JP Morgan strategists predict a smooth auction based on the recent backup in yields and relative value on the curve. Latest CFTC positioning data shows speculators were net short 1.2 million 5-year note futures, a possible source of covering demand at the auction.
And we're seeing just a little bit of that ahead of the auction. Again, going back to the 5-year note futures, pretty decent bid from their lows earlier today. Now we will zoom in because we want to get a closer look at the price action for that auction. We should see a reaction before the results are posted, and then we should have some time to parse the results and see more pricing of that reaction really within the first 20 or 30 minutes. And I would expect rates to kind of lead the market in terms of 5-year note futures and 10-year note futures, and the reaction you see there leading the equity market reaction if there is a reaction to be had. That is to say, if it's an auction that's much better or much worse than expected, that's where you would expect to see greater price reaction first in 5-year note, 10-year note futures, and then in equities. All right, so we're going to shift over to the NASDAQ here on screen. We do see a bid coming back in the NASDAQ and a healthy little bottoming pattern there that happened over that 15 minutes. So that's starting to look a little bit more constructive. But again, we do have the auction coming up, so don't want to read too deeply into the price action tea leaves until we really see how that goes. But initially seeing a bullish rebid here with increasing conviction, those larger bubbles showing buyers outnumbering sellers more and more here. Let's take a look at the Russell, which is really the most rate sensitive of the major indices. It also has a pretty similar pattern to the NASDAQ, that more constructive bottom. You saw aggressive accumulation here at these lows. That was another sign that you could have a reversal. Then that second attempt lower didn't break those lows. That ends up being constructive, so we ended up making a higher low and a higher high, kind of reversing that consolidation back up to the range. So let's see how we go from here. I think the auction is going to be pretty important for market direction in the short term. We've got oil no longer above 83. Earlier today when I was on mic, we talked about that pop there. I still like oil above $80 a barrel, but I do believe that this consolidation has to do with a little bit more time to reflect on what's happening in the overall energy markets and some presumption of geopolitical tensions kind of simmering, although I'd say that that's not necessarily a presumption we can hang our hat on. Copper looks like it's starting to base a bit here after having a move higher earlier. And gold giving up those earlier highs, it took out this large level of resting liquidity at 2350, but then immediately retreated lower. So it really looked like buyers exhausted their buying power there. You did have a bit of an exhaustive stop. You can see this is a contract with an order book depth of about 9.5 thousand. So when you have almost 500 contracts stopped out to the upside, that does start to look a bit exhaustive. And indeed, the path of least resistance.
Figure HCP shares resume trading, Hotel Charlie Papa.
So that did end up being a bit exhaustive to the upside.
HCP resuming trade now, Hotel Charlie Papa.
And that's something to look for when you're trading something intraday.
Continue to pop here, 32.22.
Silver just consolidating.
Up about 10% now. Again, that report that IBM could offer about $35 per share for HashiCorp. Shares hitting 32.22 at the high. That's HCP.
So let's take a look at HCP since it's on the radar of many right now. We're just going to close out of some of these other symbols to free up some resources. And then we'll go into DX feed here. This is where we can look up stocks. And we'll look up HashiCorp and we'll just pull it back 24 hours. We'll backfill all that data. We'll give it a sec to pull all of that. While it does that, let's take a look at the euro. And let's just zoom that out a little bit. So it has fallen a bit out of favor. Earlier, it was bid a little more. You just want to get a sense as to how the euro is doing because there are intermarket dynamics between the dollar and the S&P. The euro is about 70% of the dollar index, so I kind of like to watch how it's trading because it gives us a better sense as to, look, if the euro is well bid, that tends to be bullish for U.S. stocks because it means their revenues from overseas have positive Forex effects. On the other side, when the dollar is stronger, it tends to negatively impact that. And it affects about 40% of S&P companies, so it's something that can move markets. All right, let's go to HashiCorp, and let me just clean up the chart a little bit here as I do when I add a new symbol. Okay, and let's pull this back. So we had heard rumors of IBM, kind of circling this company and talking about wanting to potentially acquire or invest in them over the last day or so. Now it looks like it's becoming more official, and we're getting ideas of where that pricing may be. And so indeed, you do see a pretty big spike. This thing was circuit breakered, so there's a little bit of a gap in the data while it was closed. You can see that here was just the bid and the ask spread. But now we've kind of come back up. We've taken out this really large area of resting liquidity overhead. And you can see there's that absorption indicator, about 150,000 on the sell side up there. So it wasn't just what the offer was. It was a bit of an iceberg. There were some other orders kind of hanging out there as well. And now there's another 10,000 on the offer. So that may be starting to diminish some of the bullish appetites here. But this is always interesting, that story of supply and demand and the auction within markets and how they can behave, and where some of these bigger areas of resting liquidity can actually end up being important in terms of levels of resistance or support. So we'll come back to that one later, particularly if we hear some more headlines on it. Let's take a quick check-in on Tesla, which seems to be giving back some of its gains from earlier. So we'll just zoom this out a little bit.
RDDT, Reddit, getting a pop here, shows up about 2.5%. Romeo Delta Delta Tango.
So Tesla's day was one where we had this big pop, kind of continuing that overnight order flow. But you notice something with this, and this is a theme that we talk about. You got to this really big level of resting liquidity at 168. It was 105,000 on the offer, and it ran away. So what does that tell you if you're looking at auctions and trying to get an idea of supply versus demand? It tells you there was way too much supply up here. And so as soon as buyers reach that level and realize they don't have the liquidity, they don't have the requisite demand to take it through that supply zone, price retreated meaningfully and has only been going down. And you can see all those large levels of bid on the heat map were taken out because there was plenty of
results
supply.
of the 5-year note auction. At the top of the hour, we also get the when issued yield.
So we will be going over here to the 5-year note futures as we prepare for that auction now.
Final trades on CNBC, GS Goldman Sachs, META Meta, URNM, Uranium ETF.
Treasury when issued yield 4.655%.
Auction results should be posted shortly here. You can see all the liquidity dried up in the order book here. This happens around these events. This is why things can get all gappy, right? So the order book's just blank. There's nothing there. It's all dries up. And, it's kind of funny because the point of a market making mechanism, whether it's a bot or a person, is to not have this happen, but they always conveniently disappear. And so that's when you get these wider slippage events. So prior auction yield, 4.655% on the $70 billion auction for the 5-year note. The last auction's bid to cover was 2.41. The last auction's high yield was 4.235%. JP Morgan expects it to be a well-subscribed auction. Results posting momentarily.
RDDT, Reddit says rolling out updates to our iOS and Android apps to make it easier and faster to get to conversations. That's RDDT.
Bid to cover 2.39, 2.39. High yield 4.659%, 4.659%. The US sells 70 billion, awards 1.93% of bids at high. Primary dealers take 15.02%, direct 19.24%, and indirect 65.74%.
Yeah, so I'd say that wasn't the best auction. It did have a tail. It's not a huge tail, but it's enough to say that demand wasn't as good as expected. You can see that in the bid to cover this auction versus last. The prior was 2.41 bid to cover. This is 2.39. So even though yields have come up appreciably, that demand wasn't necessarily there. So I'd give that auction a C minus. Wasn't atrocious, but it's nothing to write home about. This was a lot less ideal than the 2-year note auction. 2-year note auction was quite a bit better. See if there's any reaction in 10-year note futures as well. They tend to be just a little bit more volatile. Not much. Pretty subdued reaction overall so far. Let's look at equity picture here with the NASDAQ. NASDAQ so far, it's seeing a little bit of a retreat and a rebid. And we'll zoom into the S&P a bit here.
US 5-year yield steady at 4.664% after the auction.
Yeah, just like they're saying, you know, really not much of a reaction here on the 5-year note. We'll watch this a little bit more over the next several minutes to see if there is, but typically you get a more, a larger reaction if it's a more meaningful deviation away from expectations. So also a lower indirect take than the last auction. So 5-year note bid into this. One of the things JP Morgan said ahead of this auction is you could see some strength in the futures as a reaction because you could see some covering into this. And a recent survey of their clients actually showed that people's positioning across treasuries is actually pretty neutral overall. So overall, a bit of a non-event for the broader market. Let's check back in with the NASDAQ here. Starting to see
Block
just a
trade
little
in
bit of,
ticker FRO.
little bit of distributive pressure.
Block
in the
trade in
NASDAQ.
ticker FRO.
It's Frontline. Seeing some block trades. That stock trading down about 2.33% there. And seeing that bid come back in the NASDAQ here. So it looks like market's still digesting this auction. Really, again, not much going on here. I don't think it was a great auction because the bid to cover was lower than the prior 5-year auction, even though that auction had a much lower yield. So we should have seen better demand. I wasn't a huge fan of seeing a tail. Again, not a huge tail, but enough of one to show that, again, demand wasn't very robust, and also a lower indirect take of just 65%. So not a great auction, but not a terrible auction, a C- in my book. Market seems to be taking it pretty much in stride because it wasn't a larger outlier type of event. Oh, sorry about that. My motive
Block
wave
trade and
popped up.
ticker STT.
Let's see what that one's all about. That's State Street. State Street seeing a block trade. Stock off its highs, actually trading down about 0.52%. Let's take a look at some of the options flows that are happening around the market that are of unusual size. Lots of demand for NVIDIA across the board. It was able to get above that really key area of 800 where there was the largest gamma exposure on the profile. Now we're seeing demand rise up for these 820 strikes, 447,000 in premium just paid for those on NVIDIA expiring this Friday. And actually another order, similar sweep, but 200,000 for those 820s this Friday on NVIDIA. Another 275,000 for the 810s this Friday as well.
Now, ticker DJT share seeing continued heavy activity, new highs for Delta Juliet Tango.
Block trade and ticker BMY.
All right, let's go back to the S&P futures here. We can see the advanced options visualizer on the right panel, just giving us a sense as to where there is supply and demand for some of these options. The most active option remains that call, which translates to about 5,100 on the S&P cash index, and there is still a resting offer overhead correlating with that level, showing convergence. There's a lot of interest in that area, likely to be an area of resistance if we do climb back up there. So just worth watching the gamma flip level, which we calculate with our naive model, looking at about 10,000 options across the S&P 500 full chain, is calculated just above there as well. Then you can see the second most active call strike. Not a lot of convergent interest in that level, just about 171 on offer. And of course, the hot put and warm put, which are the most active and second most active strikes in SPX, translated to ES levels, which are recalculated regularly. This data updated every minute. Gamma 4 showing us the fourth largest level of gamma exposure and the midpoint coming on screen. And what that's telling us is that there's a relative balance between the top two most active calls and puts, right? So often is the case, the midpoint, especially when it aligns with VWAP this clearly, shows us that that can be an area that's a bit magnetic and also a bit of a resistance area when it's overhead. We do see also a pretty decent area of supply overhead here. It's not quite a death cloud, but it's certainly a generous amount on offer. So the onus is on the buyers for kind of be able to push through there and above that midpoint to show they're taking control of price action here. Let's go take a look at NVIDIA with all those interesting options flows coming through. Let's see if what kind of price action there is in the stock.
KKR set to show $10 billion upfield sale as ADT talks full report from Bloomberg, now considering my possible upfield IPO or minority stake. That's KKR.
So we can see 820, that strike we talked about that was really being targeted in the options market. Pretty large level of resting offer, about 5,700 shares there on offer. So it is an area that is of interest to the market, both on the call side of NVIDIA for this Friday's expiries, but also in terms of the resting liquidity on offer there. right? So certainly a bit of a magnetic level and potentially a bit of a resistance level short term. On the other side, you've got very strong support, which was actually tested, and you can see sellers didn't have the supply to take us through that 800 strike. So it acted as support. And I think that's pretty important to see that touchdown and rejection, right? So that marks the low of the day in NVIDIA. You could see those other levels of resting bids were taken out. So at those points, you know, sellers had enough liquidity to push us through those bids. But then when we got to 800, for whatever reason, they said, nope, we just don't have the supply. And we got this stock rebid. And then we started seeing the options interest grow at these higher levels. And, you know, 820 being an area of large interest, 824 and 830 also being areas of large interest in this stock. And 800, we can see not only is that a large level of options positioning, but it's also a large bid that was able to reflect away those sellers. So price on the S&P grinding higher into that large area of offered contracts just above. We'll have to see how it reacts there. If we can push through, the next testing zone will be that midpoint convergence with VWAP. And these labels on the right side are drawn by the SPX options visualizer add-on I created for Bookmap. So if you trade the ES contract on Rhythmic or on DX feed for your data on Bookmap, you can add this plugin in. It'll take SPX options data and it'll show it with 1 minute recalculation time on this right hand side. So it could be pretty valuable, especially if you're a shorter term trader. So we'll just zoom in just a little more so we can see the granularity of this near-term price action. We'll zoom in terms of time as well. Just really focus on the last half hour here. We can see a resting
Shortly
bid
expecting
came
the
in.
results of the Fed reverse repo operation.
See an offer coming in around 50.90 as well. I'm sorry, a bid coming in around 50.90, 315 contracts in size.
$82 counterparties take 441.215 billion at the Fed reverse repo operation.
You can see that large green delta bubble favoring buyers as they absorb that overhead demand, those limit orders in the S&P 500 futures contract. So far, buyers are able to show that they actually have sufficient appetite to take out that overhead supply, which favors us moving up to VWAP, and that midpoint is the next area of a potential challenge as we approach the point of control.
At 1:30 p.m. Eastern Time, we get the Bank of Canada meeting minutes.
Checking to see how the Nasdaq's doing comparatively. So I know we're looking at about a half hour in the S&P, so we'll just kind of zoom in the Nasdaq so it's a similar period of time. And you know, it does look a pretty similar, perhaps a little bit more constructive. S&P does have more liquidity overhead, so it's more of a proving ground for it. Nasdaq, not quite as much. More blue skies overhead, which is typically the case. This is a thinner contract, as you can see. Order book depth of about 8.9 thousand. Look at the Russell here over a similar period of time. It's looking reasonably constructive, but it is getting bounced off of its point of control lower. So that is a area of resistance to be mindful of. It's also a part of the session volume profile that suggests there was more aggressive selling in that area. So it is a supply zone to be aware of. And we do see more of that demand coming in, another set of larger buying delta bubbles here. So again, showing buyer aggression absorbing that supply overhead. And more of that demand, we're still seeing S&P futures chew through that supply zone overhead with some degree of conviction from the buyers here. You can see that again in these larger delta bubbles. That's where there's more outpacing of buyers versus sellers, where there's absorption happening. And that just continues to be a bit of a theme here so far. So we also see the cumulative volume delta picking up and getting closer to positivity. So it is becoming more likely that
Let's take a
next
progressive
challenge zone-
PGR,
1:30
Papa Golf
PM
Romeo.
Eastern
Sure
time,
see
we're
an
gonna
increase
bank
of
in Canada
activity, new
meeting
lows with
minutes.
PGR.
Right. So it is becoming more likely that we get back up to that midpoint VWAP convergence area. That would be the next level where it becomes more of sort of a show me story. But you also see liquidity is starting to build above as well. You see this 51.10, 210 on offer. You see this
Yes, stop
51.20,
alert. By
215 on offer.
1008.
So you can see, buyers are steadily absorbing that. They just took out all of that overhead supply now. So path of least resistance is higher from that move. Just based on auction theory, really. And now we can see some resting offers starting to build around that midpoint area as well. It's just another reason why the options visualizer can be helpful. You can start to see where some of these areas might become important with greater conviction by having that convergence between what it's showing based off of active flows and positioning versus what you're seeing in the market and where people are interested in transacting. Let's see what's going on over there with NVIDIA and that 820 level again. Getting pretty close. We do have that large area offered at 820 and 824. We talked earlier about 800 being the bottom. It's not only an area of very large options positioning, but it's also an area where there's a very aggressive bid on that limit order, just sitting there waiting, and price got towards it and then reflected away. Now, this is where I'll share just a little kind of inside note about how I look at these levels in the context of intraday trading or multi-day trading. I don't want, if I'm trading this thing and I'm looking at that 800 level as a magnet on NVIDIA, right? So if we go, let's just zoom out to when the downtrend was more prevalent. And let's say I'm eyeing that level and saying, okay, I look at the gamma exposure, I look at the resting liquidity, I could say this is a level that I'd like to target for a downside fade. Well, the thing is, as we can see often, we don't necessarily get clean to that level. Sometimes we reflect away. So a really easy way of making sure you get more fills and have more opportunities is just walking that offer a little bit, or walking the bid, whatever side of the trade you're on. In this case, it would be the bid. So I would say, probably be easier to go in at 801 or 801.50 on the bid if you're looking at that 800 is such an important level, because you don't know if price is going to go right to it. And even if it does, you don't know
Block
if your order is
trading
going to be
ticker,
filled.
CSX.
You can have price get to a point and not necessarily be filled, even though it prints that on the tape, right? Depends on who was ahead of you in line and whether there was enough transactional activity to have your order filled or not. So increase the probability of getting that fill, be a little
1
bit
minute
away
remaining.
from that, so that if you do get there, you're able to get your order in more rapidly and ensure you get it. But in the other event that we keep seeing as a repeating theme here, if you don't get there and you reflect away, your order's still filled, right? So that's one of the keys with these big round number levels. That can be support, that can be resistance, that can be magnets, is you don't necessarily want to be right on the money because you're getting in line in front of a lot of other people that are waiting and you don't even know if price is going to hit it. Give yourself a little breathing room. Helps to increase the amount of opportunities you can realize in any given session or any time frame too. I mean, this would apply to swing trading as well and the targets that you might use.
10 seconds.
If you see price always kind of running away from those targets before it gets there, consider changing how you target.
So the governing council was split over when to cut rates. And there were different views on how much more assurance was needed to be confident that inflation was on a
Bank of
sustainable
Canada
path
minutes,
back to the 2%
Bank of
target.
Canada said some
Some
officials
members
believe
felt
more
there was a
reassurance
risk
report
of
about
keeping
inflation.
monetary policy more restrictive than needed, given the decline in inflation. Others saw a lower risk that restrictive monetary policy would slow the economy more than necessary to return inflation to target. Governing Council was still more concerned about upside risks to inflation outlook, but viewed both the upside and downside risks as less acute. Governing Council was more confident that inflationary pressures would continue to ease even as growth picked up. The Governing Council felt rapid population increase and coming decline in non-permanent residents complicated the outlook for economic activity and inflation.
So to get those Bank of Canada minutes overall seem to be well received. The market is now challenging that level we talked about as being the next logical area to see some potential resistance and interaction, that midpoint VWAP convergence. So as we build above this level, we see the point of control at around 51.14 as another area of interest. So it's still a little early yet. I wouldn't necessarily say, we're above.
Yes, stop
we're probably
alert
testing
by
more
1088.
realistically. We do see some stopping out of smaller traders, so you could get a bit of an exhaustive pop higher here if that continues as well. And you see liquidity continuing to build above and fade below. You see that trajectory of the heat map building higher and higher. That's
Noting
also
some strength in
constructive.
dollar yen, currently up 0.29% on the session.
And we see how that's sort of delicately balancing now this potential resistance becoming potential support at the VWAP level just around midpoint. And this is that sort of microstructure we talked about for an uptrend, right? It's pretty clear. Like, you don't have to overcomplicate it if you don't want to. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? As long as that pattern continues, you're also in a pretty constructive environment in terms of price discovery. It's when you violate that last higher low and then you make a lower high that you have an issue. You're either going into a consolidation or you're reversing lower. So there's a number of ways to look at this. You don't have to get terribly complicated if it doesn't suit your trading style. I like to add a lot of other data because, it helps me to get a better sense as to where some of the more important levels can be and so on. But, it depends on where you are in your trading journey is what works best for you and what adds value. Another thing that's interesting looking at this from a flow perspective is you can see these little sell downs to the higher lows have much shorter time frame and they're a bit sharper, and then you have these longer time periods of accumulation. right? So you get sort of like just a little distribution and then a long accumulation, a little distribution, a long accumulation. That's another thing that kind of just gives you a sense that that's kind of healthy buying that's occurring, right? It's not just up and away going straight up, but it's also not long periods of selling. It's kind of short and sweet, and then buyers come in and start showing interest at higher and higher lows. S&P cash now trading about flat on the day here. Let's check back in with some of the more active options flows. Nvidia now walking up to 830 strikes, about 180,000 in premium traded there for those expiring this Friday. Amazon 180s for looks like May 3rd for 110,000 in premium. But a lot of the options tape today is really being dominated by Nvidia in terms of the unusual size sweeps for near dated expiries on the call side. And as is often the case on days that are starting to show some potential for the market to move higher off its lows, you're seeing an excess of unusual large bullish activity in the options market versus bearish in single stocks and ETFs. So now we're starting to rebalance here around this midpoint. We talked about how that could be a bit of an important area, that in VWAP, and indeed it seems to be. We seem to be sort of just building some volume up around here, so we'll continue to watch. We do see also liquidity has built above us some more, which tends to be constructive. That's a good question as to why you can't picture in picture. I'm not sure if you need to update your app or if you're in the browser, clear your cache out, but I have seen the
Yes,
ability
top alert.
to
By
picture in picture these.
1006.
And we just saw a upside stop out, upside buy stop, about 1,006 contracts there. That's what that audio alert was about. And that's where some of that larger recent buying is happening. All right, so we'll just zoom in a little bit more on the microstructure here because this is kind of an important area we're watching, seeing how we resolve from here. I still think we can make our way up to that point of control at this point. It seems like we're building some acceptance here above VWAP and above the
Yes,
midpoint.
top alert. By 1012.
So, we could get back up to this point of control, and that would be the next area where the market has to make a decision. Seeing some love in
Yes,
parts
top
of
alert.
semiconductors as well
By
today.
1041.
A bit of a recent change there. Semis were getting beaten down, but Texas Instruments up now about 6% after earnings. S&P climbing closer to that point of control. We were just talking about this after we built acceptance above this VWAP, and we just saw that 426 contracts were stopped out to the buy side in that last move. So here we are approaching that point of control. We'll see how we react there. We do see more liquidity building above, which again tends to be constructive. And seeing just a little
CPHI
bit.
getting a pop here at Charlie Papa Hotel India. CPHI,
Seeing just a little bit of selling pressure here
well
after
priced
that
stock,
bounce.
moving on volume.
But again, you know, if this is just two negative delta bubbles and we just build a higher low from there, it's going to be like the rest of this pattern. Market gets nervous for like a minute or two and then it pushes back. So, you know, again, not seeing anything here that indicates a change of this sort of reversal from earlier. And we can just zoom out and see where this all took place. And really, even before the auction, we saw that the market was much more interested in accumulation. And that is a trend that seems to be continuing here. We see every sign that it could continue. We have the next line in the sand here at the point of control around 51.1375, and we do see interest continuing to build above here in terms of offers, and that tends to be constructive for price. We also have that 51.35 level. This is sort of where I would say if this thing's going to keep running above the point of control, right? This would be where it could ultimately go. If we have that real full reversal, getting back to 5100 cash, 5135 on ES to that most active call strike, it wouldn't be too unheard of, but we have to build above that point of control first.
No, ticker MSOS, Michael Sandy, Oscar Sandy, share seeing a spike in activity, new highs.
HRB, H&R Block shares ticking lower as report that Stripe will soon have merchants order, register, and file taxes. That's Hotel Romeo Bravo.
Ticker Teladoc shares continue to see heavy activity, new highs. The headline, UNH's Optum headline circulating from Bank of America. And Optum is ending the virtual care. Virtual care is a positive for Teladoc. That share's continuing to spike.
EDOC, Teladoc getting another pop here. United Health, Optum ending virtual care. Positive for Teladoc, that from Bank of America.
Block trade in ticker, MDLZ.
Yes, stop alert. By 10:28.
Ticker Boeing BX, you're seeing a spike in activity. The Moody's is downgrading Boeing to Baa3. Outlook negative for Boeing.
Moody's cuts Boeing to Baa3 from Baa2. Outlook negative. That's BA Boeing. HWBK, Hawthorne Bank Shares, reporting net income of 63 cents. That's down 34% from the same period in 2023, first quarter. That's Hotel Whiskey Bravo Kilo.
Seeing a little bit of selling pressure, got rejected just around the point of control, talked about that being a potential area of resistance. And now we're below VWAP, and we can also see that midpoint level has been removed as there's more transacting happening in the most active calls than puts. But nevertheless, we do see this downside pressure. And I think it's worth watching here because there is a little bit more motivation from sellers, and that microstructure is starting to change. You can see we're starting to make lower highs and lower lows. So just from a trend structure perspective, also starting to look a little bit more risk off just intraday here so far on S&P futures.
No ticker NVIDIA shares seeing increased activity, new lows. No shares up reached the $800 psychological level for NVIDIA.
Seeing a bit of a continuation in this distributive pressure here in the S&P, really never able to climb above that resistance level. You can see it pretty much topped out around that point of control. And we can also see that there is some degree of liquidity starting to build below us here. So I would say that buyers had control. They've lost control. Now we're in a microstructure downtrend here. We're below VWAP in the point of control. So at this point, I think the sellers enjoy a bit of a tactical advantage near term, and targeting that hot put level and this open bid at 50.90 are two reasonable near-term downside areas where we may see a little bit of a pop back.
NYMEX diesel May futures settle at $2.54 a gallon. NYMEX gasoline May futures settle at $2.73 a gallon. NYMEX WTI crude June futures settle at $82.81 a barrel. That's down 55 cents or 0.66%. And NYMEX natural gas May futures settle at $1.65.
Coming up after the close today, earnings from letter F Ford, META Meta Platforms, IBM, MOH Molina Healthcare, WHR Whirlpool, ORLY, O'Reilly Automotive, UHS United Health Services, LRCX Lam Research, URI United Rentals, CMG Chipotle Mexican Grill, NOW Service Now, WU Western Union reporting after the close.
Brent crude futures settle at $88.02 a barrel. That's down 40 cents or 0.45%.
STBA, S&T Bancorp approved the 33-cent per share cash dividend. That's up an increase of a penny over the year ago quarter. That's STBA, Sandy Tango Bravo Alpha.
Taking a look at some analyst notes on today's moves, Wall Street traders sent both stocks and bonds down ahead of economic data that will help shape the views of the Federal Reserve's next steps.
SMID, Smith Midland, announcing receipt of NASDAQ letter indicating the company was not in compliance with NASDAQ listing rule. That is Sandy Michael India Delta. AZN, AstraZeneca. AstraZeneca awarded VA contract for BTK inhibitors valued at $913 million. That's Alpha Zulu November, AZN.
I'll take a GameStop GME share. See any spike in activity at the highs for GME?
GME GameStop getting a pop here to the highs now, $10.68. So call activity earlier in GameStop. Golf Michael Echo. LUV, Southwest Airlines flight attendants ratify new contract. That's Lima Uniform Victor.
Well, ticker Hertz, HTZ, shares seeing a spike in activity, new highs, Hotel Tango Zulu.
GM, General Motors, discontinuing smart driver based on feedback. That's Golf Michael. Terminating partnerships with LexisNexis and Verisk. That's General Motors GM.
Seeing a pretty strong bid come in here. And once again, one of these areas of resting liquidity provided us a pretty big clue. We could see that price rejected moving into that 50-90 area. And that allowed us to see a reversal where buyers really started to absorb sellers and then take price higher back up here above the VWAP, now right below that point of control. It's been an area of contention. And we'll just zoom out to show how that was an area of contention earlier. So we're getting back up to the scene of the crime. Let's see this time if buyers have the sort of demand it takes to start to push higher. And we can see that there is some resting liquidity building above and diminishing below, which tends to be a little bit more bullish. So again, this has been a market. It's been a two-way market today. And that's a continuing theme into this move right now. So rounding out the last half hour of the trading day here, just thereabouts, a few minutes over, tends to be a more volatile period, as we can certainly see with some of the price action here. But I would just
APYX getting a pop here. Shares hitting $1.59 at the high. Alpha Papa Yankee X-ray.
I would just be mindful of that in terms of if you're managing risk, if you're day trading this into the close. This tends to be a more volatile period of time. There's a lot more clearing of trades happening. It's liquid. It's definitely not a terrible place to be opening and closing positions, right? The end of the day tends to be a pretty good time period for transacting because it tends to be quite liquid. But just be aware that you can certainly see larger moves, right? And we do have Meta earnings coming right up. And I will be covering that. We'll actually have them live on the stream and then the conference call after that. So stay tuned. Will be an eventful evening. Of course, we will have Meta on Bookmap as well to show the liquidity, where there's interest, and what's happening in real time after the earnings release and during the conference call. And as we approach those earnings, they are expected at 4:05 p.m. Eastern, with EPS of $4.30 and revenue of $36.14 billion. So once again, Meta results posting around 4:05 p.m. EPS expectations of $4.30, revenue of $36.1 billion. Let's take a look around some of these other markets that are trading, starting with the NASDAQ here. NASDAQ seeing resistance right there at VWAP. This is an area that is always interesting to watch. We are still well below the point of control in the NASDAQ as well. So important to see if we can get any kind of upside continuation above that VWAP level. Let's check in on the Russell 2000, which is above its respective point of control. We can see that acted as both an area of resistance and support, now pushing higher with VWAP above. Let's take a look at the 5-year note after that auction. We'll just zoom all the way out. So we can see that was relatively well received by the market at first. Then we saw some selling pressure.
Block
Now
trade
we're
and ticker
back
LKQ.
kind of where we
MTC,
were
MMTech getting a pop here. Michael
just
Tango
after the
Charlie.
auction. So just a bit of a wash in terms of the overall impact. You did see some larger
Yemen's
iceberg
Houthis
selling.
say they carried out 3 military operations in the Gulf of Aden and the Indian Ocean.
And that's just giving us a sense that despite the negative reaction to the bond auction, which wasn't a great auction overall, looks like the market was able to reverse most of that and is looking past it now, particularly in equities, but also we can see that in the 5-year, and we'll see what we have in the 10-year. I imagine it's a somewhat similar look. Yeah, it's a pretty overall, pretty similar look here in the 10-year as well. Checking in on crude oil, trading 82.94 here. And this is not a very liquid contract, just about 9.1 thousand order book depth, but there is a decent amount of resting liquidity, both above and below, but primarily above. And looks like below just around 82.50 and above 84, the largest areas of interest.
MYMD, shares moving on very light volume now. Michael Yankee, Michael Delta.
Copper's been pretty volatile today, sort of all over the map here on its chart.
Yemen's
but
Houthis
Yemen's
say
Houthis
they
say they
targeted
targeted the
Veracruz Israeli
MSC
ship in the Indian
Veracruz Israeli
Ocean.
ship in the Indian Ocean.
Oh boy. All right, let's continue to move around here, see if there's any reaction in gold. These geopolitical headlines, really none, very subdued, just trading under the point of control here, 23.3480 on the front month gold. And then silver trading 27.29 above its point of control and VWAP. Pretty choppy day, but overall recovering, right? Maybe off its lows, but still a red day for silver overall. The euro getting a nice pop here towards the end of the day and actually breaking out of the top end of its range here into an area of potential supply and seeing some selling there. But overall, this is just showing you the dollar is well off its highs of the day. Let's take a look at Apple here. And we'll zoom this one out to see a bit more of the day's action. So yeah, pretty decent day.
That took a CSSE, Charlie Sandy San Diego. Sure, seeing any spike in activity, new high, CSSE.
And that 169 level, pretty important area of potential resistance. It sort of seems to be struggling with so far. You can see there's a lot of absorption up there of buyers. And we've got Amazon. Let's zoom out on this one as well. Looks like a pretty choppy day. Came down. Didn't quite fill this really large order at 176. And this has been a recurring theme here. You see these really large pockets of liquidity and not necessarily seeing them filled above or below, and then price moving the other direction, right? So this area, this 176, is an important area for Amazon. As we can see, so far, sellers can't seem to get it through that level. We seem to reflect higher every time we get close. Google looking pretty constructive into the close here. And overall, it looks like it had a nasty start to the day and then came back, got rejected at 159 where there was a large area of liquidity, but just recently took that out and is now pushing higher. Meta, where their earnings coming out just about 5 minutes after the bell, seeing a little bit of selling pressure here, but overall a reasonably constructive last hour of trading for the stock.
White House wants divestment of TikTok ban.
And overall, not a great day for the stock, right? You can see that at the opening bell, selling pressure overall last hour has been constructive, but it's been kind of a sloppy day for this thing and a lot of resistance up here at 510. So we'll see what our next
TikTok news. White House says there are a number of interested potential buyers.
Well, that'll be interesting too, that whole TikTok fiasco. But yeah, I would say 510 tonight could be interesting if they have positive earnings. This could be an area where the price action may stop, or at least see some resistance. And then we also have a pretty big gap.
The SSE chicken soup for the soul, 50 cents now. Share is up 218%. Charlie Sandy San Diego.
So if you look at the meta chart longer term, you can see there's this pretty nasty potential gap to fill. So I think that's important to pay attention to. Like if this stock really has a very disappointing earnings or guide and it starts trading below 454, and I know that seems like forever down, but remember, we haven't really been at these lofty levels for too long. The structure up here is not particularly resilient. So if we start to see price push below 454.08, you've got this big pocket of nothing. that would be an area of decision, and it could get pretty heavy there. You could see price start to gravitate towards the next area of the auction profile, that longer term volume profile where there's interest at lower prices. So I would say there's both upside potential here, but if you have a really disappointing earnings report, that downside
White
risk
House
is
said China should
magnified.
allow TikTok to be sold. Said there were a number of interested potential buyers.
So we'll be watching Meta tonight. Earnings coming out 4:05 p.m. We have expectations of EPS of $4.30 and revenue of $36.1 billion. Let's switch back our view here to the S&P 500, the heart of it all, really. You can see some liquidity building above us here, a little bit more at that 5120 area. We also still have that resting offer at 5135 that's been there that whole time. That call was the most active strike on the SPX chain, converted to ES levels. So areas for us to watch as we get closer to the close and during the after hours session if it's particularly it's a particularly exciting after hours. And this is a really busy week for earnings. You've got about 40% of S&P companies by market cap reporting this week, if not more. And so tonight you've got Meta, you've got IBM, Ford, Chipotle, ServiceNow, Viking, Lam Research, Celestica, Vail, and Align among some of the most anticipated earnings. And looks like S&P just sort of building some acceptance here above VWAP, but below that point of control. Potentially seeing Gamma 5 as an area of resistance to be watching. And these levels all come in from that SPX options visualizer that is going through all the options on CBOE for the S&P 500 contract, and then updating these levels of both active flows and positioning every minute. So if you have any questions about what you're seeing on screen, or if you want me to look at any other charts for other stocks or otherwise, let me know in the chat. Got just about 18 minutes before the close here. And we will be live after the close for the Meta earnings release.
US money market fund assets up 11.24 billion for the week ended April 23rd.
GME, GameStop, more highs now. Golf Michael Echo.
Last 15 minutes of the trading day here, just about 20 minutes out from Meta earnings and a little further out from IBM, about 25 minutes before those earnings come out. Meta certainly has to do a lot to impress this market to demonstrate that their pivot into AI is really starting to be something that they're seeing revenue and earnings growth expansion from. And I think that's going to be something that'll be pretty important for them to talk about on the conference call as to where they see this all going from here. They've put a lot of effort into their virtual assistant, their open source versions of AI, like these Llama models, with the third iteration of that just coming out recently. And admittedly, these are impressive. They are, Llama 3 is among the best open source model out there for open source language learning model, or a large language model. But on the other side of it, you know, there is a lot of competition in this space. It's not something you can easily monetize. Most of what Meta is doing is kind of building onto their platform and contributing to open source. So there's not a direct path towards monetization here. Maybe improved usage of Facebook, maybe improved usage of WhatsApp, maybe more usage on the platform. But does that directly convert to increase revenue? That's going to be a big question, particularly given the energy usage. Meta spent a lot of money on investing in H100s. Now the question on the mind of investors is, can they turn this investment into something that's able to grow this company's revenue and earnings? All right, now we're just entering really the last part of the trading day, just over 10 minutes left here until the close, just about a little over that, about 15 plus minutes until we get into Meta's earnings. We can see NASDAQ, just like S&P, just sort of consolidating here so far over the last 25 minutes, starting to make a push over VWAP. These consolidations typically lead to a larger move one way or the other. The longer you consolidate, the bigger the move. So we're starting to see that move higher here. Let's see what happens in these last 10 minutes or so. Russell, a similar look, kind of building in an uptrend more than a consolidation. Crude oil just sort of flat here, just under $83. Gold continuing to trace a bit lower after reaching those intraday highs. And let's just take a quick look at Meta ahead of earnings. And we can see that some of that downside pressure being relieved, but overall it's been a pretty difficult day for the stock. And 510, it's been a pretty enormous level of supply the stock couldn't get above earlier. Right now, just challenging the VWAP from below around 495.50 a share.
Market on close imbalance, 1.1 billion to the sell side.
It's about 5 minutes left until the closing bell here and about 10 minutes until Meta earnings. And we are expecting EPS of $4.30 a share, revenue of $36.1 billion. IBM expected at 4:10 p.m. with EPS of $1.59 a share and revenue of $14.56 billion. And pretty much just consolidation here as we approach the close. So it looks like the decision, well, it may be made after hours if there is to be one.
At 4:05 p.m. Eastern Time, we get Meta's first quarter 2024 earnings, estimated EPS at $4.30, and estimated revenue at $36.1 billion.
So again, as we approach those Meta earnings, 500 and 510 are areas to watch overhead. You could get a bid all the way up to easily 530 at the top of this range as well, and really strong results and guidance. On the other side, you do have room into the Ichimoku cloud.
Coming
You
up
could-
at 4 p.m. Eastern Time, earnings from BALE Valet at 4:05, letter F, Ford, LRCX Lam Research, META Meta, WU Western Union at 4:08, IBM at 4:10, CMG, Chipotle Mexican Grill.
So definitely going to be busy there. But yeah, we do have this gap risk here in Meta. If it's something substantially bad, you could certainly see a look below that 454. Then it'd be really important to see if the decision is made to come back up into this area of volume profile, or if we see a more gappy move lower. Now, obviously, that's a huge move for the company. That would be almost 20%. So I'm not saying that's what's going to happen. I'm just saying if there was a really big risk off move over a series of days, that could be what happens on much worse than expected results and guidance. On the other side here, however, we are below this trend line that we've been above for most of 2024. So the bottom of that trend line could also pose just some level of resistance here as we look at this, so that's going to put us just around 523, that area we talked about being the top of the range. So, I would say we have a variety of outcomes that could play out, but I think the downside risk is a little more pronounced than the upside, but it's going to depend on a lot of what this company has to say. It is a high bar going into their earnings. Just about over 2 minutes left until the closing bell here.
I'm ticker INM, India November Michael. Note patent circulations on the name INM. Metabolic engineering of E. coli.
INM, InMed Pharmaceuticals, received notice of allowance for U.S. patent application, metabolic engineering of E. coli for the biosynthesis of cannabinoid products. That's India November Michael.
And we are approaching the closing bell here, seeing a bit of pressure into the close so far on S&P just in these last minutes of trading here. And we've just sort of been pinned between the point of control and VWAP for quite a little while here on S&P futures. So it's been a bit like Paint Drying Simulator 2024 again, where you just get kind of caught in this, small ping pong range. It's not tiny, but it's basically a 15 handle range that we've been trading in for the better part of the last hour.
At 4:05 p.m. Eastern Time, we get Meta's first quarter 2024 earnings, estimated EPS at $4.30, estimated revenue at $36.1 billion. And at 4:10
SNPS
p.m.
and
Eastern Time, we
TSM
get
Synopsys
IBM's.
accelerates next level chip innovation on TSM advanced processes.
And that selling pressure that really
That's Sandy November Papa Sandy and Tango Sandy Michael.
really did accelerate through the close there. So that is interesting. So let's switch things over to Meta here as we prepare for their earnings. I'm just going to bring their stock on screen and get things just a bit situated. We'll zoom in just a little more. And we'll just keep in mind we've got that really large offer overhead that had acted as resistance today. And now we're in the after hours session.
SNBR sleep number reporting, Sandy November Bravo Romeo. SNBR reporting sales of 470 million. The estimate was 474 million for Sandy November Bravo Romeo. SNBR, a loss of 35 cents. The estimate was a loss of 22 cents for SNBR. ALGN, Align Technology, reporting $2.14. The estimate on ALGN was $1.96. That's a beat for ALGN, Alpha Lima Golf November. SEIC, SEI Investments, 99 cents. That's a penny beat for Sandy Echo India, Charlie.
So we did see some of that pressure in Meta drag the point of control after
ANX, Night Swift.
493.50. So that 493.50 level is going to be a little bit important. You can see it on the session volume profile here, that 943,000 shares on the sell side were exchanged there. So it's an important level to watch.
CHDN, Churchill Downs reporting. Churchill Downs reporting $1.08. The estimate was $1.97.
Meta earnings expected any minute now, really around 4:05 p.m. Eastern.
BMRN, BioMarin, reporting revenue of $648.8 million. That's short. Earnings of 46 cents. The estimate was 46 cents, so that's in line for BMRN. CACI reported adjusted earnings of $5.74. The estimate was $5.63 for Charlie Alpha Charlie India. Revenue of 1.9 billion is a beat for CACI, Charlie Alpha Charlie India. META, Meta, reporting $4.71. The estimate was $4.32. That's a beat. For Meta, revenue $36.45 billion. The estimate was $36.156 billion. That's a beat for Michael Echo Tango Alpha. META. WHR Whirlpool reporting $1.78. The estimate on Whirlpool was $1.71. That's a beat for WHR. $1.78. That's a beat for Whirlpool Whiskey Hotel Romeo, WHR. Letter F, Ford. Ford reporting 33 cents in earnings for letter F. The estimate was 50 cents. 49 cents adjusted is a penny. 49 cents adjusted. The estimate was 42 cents for letter F, Ford.
Pretty negative initial reaction to what seems to be a beat on Meta earnings. Remember,
LRCX, Lam Research. Lam Research reported $7.79. The estimate was $7.26. That's a beat for LRCX.
so this was a pretty high bar for Meta. It looks so far like this is being met with disappointment. The stock's down about 10% after hours in reaction to this earnings release. And
IBM to acquire HashiCorp, India Bravo Michael, Hotel Charlie Papa.
we knew that it was going to be a high bar for Meta on this one. And it definitely seems like, at least so far, we'll have to see how the reaction goes from here. Initial reaction can be a bit of a head fake for one, and also we have the conference call coming up. But so far, this looks like a market that's not too impressed with these earnings.
$35 per share. As reported earlier, that's India Bravo Michael acquiring HashiCorp HCP for $35 per share in cash.
Downside pressure in Meta is continuing here, making new lows.
Meta, META, said we expect 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion due to higher infrastructure and legal costs. That's META. IBM reporting $1.72. The estimate on IBM was $1.59. That's a beat. Adjusted $1.68. So that's a beat for IBM. Revenue $14.46 billion is short of the $14.52 billion estimate for India Bravo Michael. WU, Western Union. Western Union to 45 cents. The estimate was 41 cents. Revenue 1.05 billion. The estimate was 1.01 billion for Whiskey Uniform.
So IBM, not the best earnings, but trading down just about 3% after hours to 178 and change.
ASGN reporting 81 cents. The estimate was $1.11. Alpha Sandy Golf November. NOW, ServiceNow reporting. Chipotle Mexican Grill is out. CMG, Chipotle Mexican Grill reporting $13.01. The estimate was $11.52. That's a beat for Charlie Michael Golf. Revenue, $2.7 billion. The estimate was $2.675 billion. That's a beat for CMG. Adjusted earnings of $13.37. So that's a beat for Chipotle Mexican Grill. NOW ServiceNow reported $1.67. The estimate $3.14. That does not compare for NOW. CMG, Chipotle Mexican Grill, said due to the timing of our announcement of a 50-for-1 stock split, we were unable to repurchase our shares for most of the quarter. Plan to resume opportunistically repurchasing shares when our trading window opens on April 26th. That's CMG, Chipotle Mexican Grill. WH Wyndham Hotels reported 78 cents. The estimate on WH was 77 cents. That's a penny beat. Revenue of $306 million. The estimate was $310 million or $318 million. So that's short on revenue for Whiskey Hotel.
Looks like one of the areas of concern in the market is the narrowness of the beat and Meta's family of apps and ad revenue. They did do better on their operating loss in terms of Reality Labs, but they still lost $3.85 billion versus an estimated loss of about $4.3 billion. Stock is currently trading about 447.67, still down over 9% after hours. Conference call coming up in just about 31 minutes, so we will be streaming that as we get to it.
Letter F, Ford said Model E revenue is down as wholesales declined and significant industry-wide pricing pressure. Expects EV costs to improve going forward, but be offset by top-line pressure. That's letter F.
Ford up 2.68% after hours. Seeing some resting liquidity on the bid side building below Meta. Typically, this could be an area of decision, and often is the case.
GM General Motors initiation at Bernstein with an outperform and $55 price target. That's Golf Michael. Shares of Ford popping 1361 at the high, off the highs now on.
And so we are getting pulled a bit into that
letter
liquidity.
F.
We can see that now at 440 getting taken out. to the downside, 435, just below it. And so when the prevalent
Shares of
trend is
IBM
down, you
off
see
the lows
liquidity
now,
emerge.
176.78.
Often is the case that you do see a more likely outcome of it getting filled. So we are seeing that now with Meta. The selling pressure is continuing in this stock.
MOH, Molina Healthcare. Molina Healthcare reporting $5.73. The estimate on Molina Healthcare was $5.64. That's a beat. Revenue of $9.93 billion is a beat for a Michael Oscar hotel. CYH Community Health reporting a loss of 32 cents. The estimate for Community Health was a loss of 16 cents, so that's a wider loss than expected for CYH. UHS, Universal Health, reported $3.70. The estimate was $3.13 for UHS. $3.84 billion in revenue. The estimate was $3.7 billion. That's a beat for Uniform Hotel Sandy. WHR, Whirlpool reaffirming full-year ongoing earnings per diluted share of $13 to $15.
Forward trading up just about 4% after hours here. CFO John Lawler being interviewed on Bloomberg now.
That's versus the $13.24 estimate for WHR.
And so sellers continuing to chew through that 440 liquidity level, looking like we're carving a path lower, possibly down to 435. Let's just see
ICLR,
how
Icon reporting $2.25.
435 looks like the largest level of resting liquidity anywhere near price right now. So we'll be keeping an eye on that level. Meta's conference call set to start in just about 25 minutes here.
The estimate $3.44. India Charlie Lima Romeo. Shares of Meta off the lows now 440.
Yes, stop alert. Sell 1018.
Down about $53 on Meta, META.
It's having a lot of trouble holding that 440 level, though. Seems to be an area now where people want to sell it. Let's just take a quick look at the futures
Taking a look
here.
at the market wrap for today's session, a $250 billion exchange-traded fund tracking the Nasdaq 100 was hit in the late hours after Meta Platforms fell on a disappointing revenue forecast.
STC, Steward
Equities
Information
struggled to gain
Services,
traction in the
reported
run-up to the
17
social media giant's results, as traders position for economic data that will help shape public perceptions of the Federal Reserve's next moves. Treasuries remained under pressure after a $70 billion sale of notes failed to alleviate fears of further losses. For weeks, traders have been reducing their bets on how many rate cuts the Fed will make in the face of strong US data. Economists predict that gross domestic products will fall to around 2.5% in the first quarter, implying that inflationary pressures will remain high. The S&P 500 closed slightly higher than 5,070. Treasury 10-year yields increased 4 basis points to 4.64%. The yen fell about 155 per dollar, causing intervention concerns.
We are definitely seeing some
That's a loss
pressure.
of 13 cents actually on STC, Sandy Tango Charlie.
Definitely seeing some pressure here on NASDAQ futures after hours, after those Meta earnings were not received well. S&P futures seeing some pressure as well, not quite as pronounced, perhaps. Let's see what the... Oh, no, I take that back. Actually was a pretty decent gap down. So we're down almost 40 handles
HCP, HashiCorp at just off the highs now, 32.63. Up $1.22 after hours. Again, IBM acquiring HashiCorp for $35 per share in cash. That's Hotel Charlie Papa, India Bravo Michael.
So we could see, the point of control has been an area of struggle for S&P this whole time. When we had a negative event catalyst, we cut right through VWAP.
AZZ is offering 4 million shares of its common stock in an underwritten public offering. That's Alpha Zulu Zulu, AZZ.
And we're now down to that level where there was the second most active put strike, and we see a bid building below us just around 50.65 as well. Shifting back over to the NASDAQ, we can see there was a similar gap down on Meta's earnings news, and then we took out a rather large area of resting liquidity on the bid side around 17,500, and that's been absorbed, and we see some liquidity building down here at 17,450. Let's get back to Meta here, see how it's trading ahead of its conference call, which is just about 20 minutes away. Continuing to move lower here. So, we took out 440. We talked about 435 as the next level. We could see sellers continue to show aggression there. Now we're down below 430. So the selling in Meta is accelerating. And remember, this was a stock that had a pretty high burden of proof to kind of show the market that the rally that it's had was warranted. And it doesn't seem like the market is seeing what it wanted to see. Maybe it wanted to see more revenues that you could attribute to AI, or maybe it wanted to see better margin expansion, or maybe it wanted to see not such a narrow beat on apps and ads. But whatever the case may be, it's not liking what it's seeing so far here. The guidance also wasn't terribly strong, and that has been a theme with some of these stocks. Like Netflix came in with a strong double beat, but gave us softer than expected guidance, and the stock was punished for that. So that's probably part of the picture of this repricing as well. But this is a stock that was trading quite a bit higher. Let's zoom out just to get a better context. So you can see this stock was trading at 510 earlier, right? Now it's trading at 432. That's a pretty big move in a short period of time. And most of that move happened just after 4 p.m. The stock rose marginally after hours, and then as soon as earnings came out, it dropped from about 497 and change all the way down to 432, and it's still dropping here.
Ternium out with their results. $1.84 for TX. The estimate was $1.54 for Tango X-ray.
After hours, S&P futures trading down about 0.6%. NASDAQ futures trading down 0.85%. And seeing the VIX up just about 1.18%. Just about 18 minutes out from the Meta conference call. Certainly seems like investors are saying there's a lot of explaining to do, as we saw a pretty deeply negative reaction to the
U.S.
release
Justice
of their earnings.
Department to decide by as soon as late May whether Boeing violated prosecution deal. That, according to sources, BA.
Yeah, two things concerning the market about the Meta earnings release is their guidance and their higher costs.
Block trade and ticker, CSX. Block trade and ticker, LW.
So we're going to revisit this chart that I brought out earlier because it was sort of that worst case scenario chart. And, price right now we can see in the post market is trading down into this gap zone, right? So this is a bit of a concern because what it tells you is we've gapped up into this area of price that was an extreme, right? I believe, if I'm not mistaken, it's a price area the stock has never been before. So there's no real transactional profile up there. And there's literally nothing here in the volume profile. So where we are after hours right now is an unexplored area. And there's really two significant outcomes that tend to happen in these decision zones, right? You either, like I'm taking this from where price is right now in post. So you either basically accept price below that decision zone, or it ends up being a head fake and price gets back out of the decision zone, back into the chunkier volume profile. So we do have a much greater potential for volatility here, significant volatility follow through. It's just directionally unclear. I think it's going to have a lot to do with the conference call, but so far the market seems to be telling us in no uncertain terms it favors lower. Tomorrow's regular trading hour session is going to be very important for this stock, and really how it closes this week and the weekly chart will be even more important. So remember, earnings take a couple days to digest. You've got companies that may decide they want to make changes. Some companies may decide they want to sell the stock into this. Others may say they've been waiting for a dip. They can look past this and they may end up buying the stock. So we really have to
Kaiser
see
Aluminum reporting
how it all kind of plays out is basically the big takeaway. But we have two scenarios here where the price can move pretty significantly in either direction from where it is currently, depending on how the next several days go. Because it's an area where we have a gap to fill, I feel like the likelihood is we get pulled into this lower area of the gap, maybe in the low 400s and maybe even the very high 300s, and kind of get stuck there for a bit. That would be my thesis, just kind of based on what we're seeing and how this type of volume profile setup tends to go over time. So hopefully that's helpful. I'm going to keep it on the price screen here on Bookmap so we can watch it more real time after hours.
$9.20. The estimate was $9.26 for Oscar Romeo Lima Yankee, ORLY. Sales of 3.98 billion. The estimate was 3.982 billion, so that's just slightly short on revenue for or sales for ORLY. Oscar Romeo Lima Yankee. CMG, Chipotle Mexican Grill, shares off the highs now, 30.40. About $113. That's Charlie Michael Golf.
Just about 12 minutes away from the Meta conference call here. And we'll just zoom out a little bit so we have that greater picture of price action, just so we have a better sense as to how this thing was trading before the earnings came out and then after earnings. And another thing that it's important to think about here, you can see how much liquidity there was before the after hours session. You can see even during the after hours session, there was still a reasonable amount of liquidity. But you can also see as soon as earnings were released, what happened? All that liquidity pretty much vanished except for some of it overhead. That's one of the reasons that trading these event volatility types of situations like earnings is very dangerous in terms of where you may get your fill, right? Because if you were hoping to stop out in this madness, you may not have gotten your stop filled until around here where the execution became a little bit more reliable, right? Because during this period, it was just gapping down. So maybe you had a stop at 490. Maybe it didn't get filled until 455 or 440. Or wherever it did before, this started to get a little bit more liquid, depending on the size of your position and how much slippage was happening. So the point of that is that, yes, you should use stops. Stops are really important risk management tools. But when you're trading individual stocks, particularly after hours, the liquidity dynamics change a lot, which means that if you're actually trying to trade that, size needs to shrink a lot after hours versus the regular trading hours session. Because your risk after hours is much higher, slippage is much higher, your ability to get a consistent fill with any position of size is much lower. You're going to have basically the order book kind of getting chased around if you have a decent size that you're trying to get filled. So you've got to really trade the market a lot differently after hours. It's not something I recommend doing at all if you're not an experienced trader, and especially an experienced trader that understands how different after hours dynamics are for equities. And earnings tend to be one of those environments that amplifies those dynamics considerably. IBM trading down 7.12% after hours to 171. And Meta after hours right now trading down to 433.43, down 12.17%. So this is still a rather unforgiving earnings season, all things considered. Tesla sort of pulled a miracle out by getting the market very excited about their near-term cheaper EV offerings, which we'll see whether or not they come to fruition by Q1. Because on the one hand, we're being told there's a lot of issues on their supply chain, particularly in Europe. On the other hand, we're being told they can retool existing production capabilities to produce this new car, and that they're even going to reduce the cost of goods sold. So, it's an interesting picture. We'll see how it actually plays out. ServiceNow trading down 5% after hours. This is another major that was reporting tonight. We did see a bit of buyer absorption down here in Meta. You can see that 94.67 print. And conference call is set to start in just over 8 minutes here for Meta.
SLM, Sally Mae out with their results, waiting for those numbers. Sally Mae reporting GAAP earnings of $1.27. That's Sandy Lima Michael. The estimate was $1.08. Sally Mae sees
Yes, top alert.
2024
Sell
guidance of
1001.
$2.60 to $2.70.
Yes, top alert.
That's SLM.
Sell 1000.
IBM shares right now down about $12 off the lows. India Bravo Michael. SIEB, SIBA Financial received notification of deficiency from NASDAQ related to delayed filing of their annual report on Form 10K. That's SIEB.
Meta conference call will be starting in just approximately 1 minute here. And we will simulcast it live on YouTube and Twitter and Twitch. And we'll be turning things over to the conference call here, which is starting in just 10 seconds. They must be trying to figure out how many times they should be saying AI on the call, because this is a bit of a wait time, I would say, versus when it was scheduled. Still waiting for the Meta conference call to start here. They've given us some kind of otherworldly hold music to listen to and tap our thumbs to as we wait. Stocks bouncing into the call, a little bit of optimism, perhaps front running what the expectations are to be said. I'm going to just hedge and say a lot of AI mentions because they really have been focusing on AI, but I think they'll try to convince investors that that journey is going to somehow lead to a profit that at the moment seems elusive.
Good afternoon. My name is Krista, and I will be your conference operator today. At this time, I would like to welcome everyone to the Meta First Quarter Earnings Conference Call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. To withdraw your question, again press star 1. We ask that you limit yourself to one question. This call will be recorded. Thank you very much. Ken Dorrell, Meta's Director of Investor Relations, you may begin.
Thank you. Good afternoon and welcome to Meta Platforms' First Quarter 2024 Earnings Conference Call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's earnings press release and in our annual report on Form 10-K filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.fb.com. And now, I'd like to turn the call over to Mark.
All right, thanks, Ken. And hey, everyone, thanks for joining. It's been a good start to the year, both in terms of product momentum and business performance. We estimate that more than 3.2 billion people use at least one of our apps each day, and we're seeing healthy growth in the US. And I want to call out WhatsApp specifically, where the number of daily actives and message sends in the US keeps gaining momentum, and I think we're on a good path there. We've also made good progress on our AI and metaverse efforts, and that's where I'm going to focus most of my comments today. So let's start with AI. We are building a number of different AI services, from Meta AI, our AI assistant that you can ask any question across our apps and glasses, to creator AIs that help creators engage their communities and that fans can interact with, to business AIs that we think every business eventually on our platform will use to help customers buy things and get customer support, to internal coding and development AIs, to hardware like glasses for people to interact with AIs, and a lot more. Last week, we had the major release of our new version of Meta AI that is now powered by our latest model, Llama 3. And our goal with Meta AI is to build the world's leading AI service, both in quality and usage. The initial rollout of Meta AI is going well. Tens of millions of people have already tried it. The feedback is very positive, and when I first checked in with our teams, the majority of feedback we were getting was people asking us to release Meta AI for them wherever they are. So we've started launching Meta AI in some English-speaking countries, and we'll roll out in more languages and countries over the coming months. You all know our product development playbook by this point. We release an early version of a product to a limited audience to gather feedback and start improving it. And then once we think it's ready, then we make it available to more people. That early release was last fall. And with this release, we are now moving to that next growth phase of our playbook. We believe that Meta AI with Llama 3 is now the most intelligent AI assistant that you can freely use. And now that we have the superior quality product, we are making it easier for lots of people to use it within WhatsApp, Messenger, Instagram, and Facebook. Now, in addition to answering more complex queries, a few other notable and unique features from this release. Meta AI now creates animations from still images and now generates high-quality images so fast that it can create and update them as you are typing, which is pretty awesome. I've seen a lot of people commenting about that experience online and how they've never seen or experienced anything like it before. In terms of the core AI model and intelligence that's powering Meta AI, I'm very pleased with how Llama 3 has come together so far. The 8 billion and 70 billion parameter models that we released are best in class for their scale. The 400 plus billion parameter model that we're still training seems on track to be industry leading on several benchmarks. And I expect that our models are just going to improve further from open source contributions. Overall, I view the results our teams have achieved here as another key milestone in showing that we have the talent, data, and ability to scale infrastructure to build the world's leading AI models and services. And this leads me to believe that we should invest significantly more over the coming years to build even more advanced models and the largest scale AI services in the world. As we're scaling CapEx and energy expenses for AI, we'll continue focusing on operating the rest of our company efficiently, but realistically, even with shifting many of our existing resources to focus on AI, we'll still grow our investment envelope meaningfully before we make much revenue from some of these new products. I think it's worth calling that out, that we've historically seen a lot of volatility in our stock during this phase of our product playbook, where we're investing in scaling a new product but aren't yet monetizing it. We saw this with Reels, Stories, as newsfeed transitioned to mobile, and more. And I also expect to see a multi-year investment cycle before we fully scaled Meta AI, business AIs, and more into the profitable services I expect as well. Historically, investing to build these new scaled experiences in our apps has been a very good long-term investment for us and for investors who have stuck with us. And the initial signs are quite positive here too. But building the leading AI will also be a larger undertaking than the other experiences we've added to our apps, and this is likely going to take several years. On the upside, once our new AI services reach scale, we have a strong track record of monetizing them effectively. There are several ways to build a massive business here, including scaling business messaging, introducing ads or paid content into AI interactions, and enabling people to pay to use bigger AI models and access more compute. And on top of those, AI is already helping us improve app engagement, which naturally leads to seeing more ads, and improving ads directly to deliver more value. So if the technology and products evolve in the way that we hope, each of those will unlock massive amounts of value for people and business for us over time. We're seeing good progress on some of these efforts already. Right now, about 30% of the posts on Facebook feed are delivered by our AI recommendation system. That's up 2x over the last couple of years. And for the first time ever, more than 50% of the content that people see on Instagram is now AI recommended. AI has also been a huge part of how we create value for advertisers by showing people more relevant ads. And if you look at our two end-to-end AI-powered tools, Advantage Plus Shopping and Advantage Plus App Campaigns, revenue flowing through those has more than doubled since last year. We're also going to continue to be very focused on efficiency as we scale Meta AI and other AI services. Some of this will come from improving how we train and run models. Some improvements will come from the open source community, and where improving cost efficiency is one of the main areas that I expect that open sourcing will help us improve, similar to what we saw with Open Compute. We'll also keep making progress on building more of our own silicon. Our Meta Training and Inference Accelerator chip has successfully enabled us to run some of our recommendations-related workloads on this less expensive stack. And as this program matures over the coming years, we plan to expand this to more of our workloads as well. And of course, as we ramp these investments, we will also continue to carefully manage headcount and other expense growth throughout the company. Now, in addition to our work on AI, our other long-term focus is the metaverse. It's been interesting to see how these two themes have come together. This is clearest when you look at glasses. I used to think that AR glasses wouldn't really be a mainstream product until we had full holographic displays. And I still think that that's going to be awesome and is the long-term mature state for the product. But now it seems pretty clear that there's also a meaningful market for fashionable AI glasses without a display. Glasses are the ideal device for an AI assistant because you can let them see what you see and hear what you hear. So they have full context on what's going on around you as they help you with whatever you're trying to do. Our launch this week of Meta AI with Vision on the glasses is a good example where you can now ask questions about things that you're looking at. Now, one strategy dynamic that I've been reflecting on is that an increasing amount of our Reality Labs work is going towards serving our AI efforts. We currently report on our financials as if Family of Apps and Reality Labs were two completely separate businesses, but strategically, I think of them as fundamentally the same business, with the vision of Reality Labs to build the next generation of computing platforms in large part, so that way we can build the best apps and experiences on top of them. Over time, we'll need to find better ways to articulate the value that's generated here across both segments, so it doesn't just seem like our hardware costs increase as our glasses ecosystem scales, but all the value flows to a different segment. The Ray-Ban Meta glasses that we built with SLR Luxottica continue to do well and are sold out in many styles and colors. So we're working to make more and release additional styles as quickly as we can. We just released the new Cat Eye Skylar design yesterday, which is more feminine. And in general, I'm optimistic about our approach of starting with the classics and expanding with an increasing diversity of options over time. If we want everyone to be able to use wearable AI, I think eyewear is a bit different from phones or watches in that people are going to want very different designs. So I think our approach of partnering with the leading eyewear brands will help us serve more of the market. I think a similar open ecosystem approach will help us expand the virtual and mixed reality headset market over time as well. We announced that we're opening up Meta Horizon OS, the operating system we've built to power Quest. As the ecosystem grows, I think there will be sufficient diversity in how people use mixed reality that there will be demand for more designs than we'll be able to build. For example, a work-focused headset may be slightly less designed for motion, but may want to be lighter by connecting to your laptop. A fitness-focused headset may be lighter with sweat-wicking materials. An entertainment-focused headset may prioritize the highest resolution displays over everything else. A gaming-focused headset may prioritize peripherals and haptics, or a device that comes with Xbox controllers and a Game Pass subscription out of the box. Now, to be clear, I think that our first-party Quest devices will continue to be the most popular headsets, as we see today, and we'll continue focusing on advancing the state-of-the-art tech and making it accessible to everyone. But I also think that opening our ecosystem and opening our operating system will help the overall mixed reality ecosystem grow even faster. Now, in addition to AI and the metaverse, we're seeing good improvements across our apps. I touched on some of the most important trends already with WhatsApp growth in the US and AI-powered recommendations in our feeds and reels already. But I do want to mention that video continues to be a bright spot. This month, we launched an updated full-screen video player on Facebook that brings together reels, longer videos, and live content into a single experience with a unified recommendation system. On Instagram, reels and video continue to drive engagement, with reels alone now making up 50% of the time that's spent within the app. Threads is growing well too. There are now more than 150 million monthly actives, and it continues to generally be on the trajectory that I hope to see. And of course, my daughters would want me to mention that Taylor Swift is now on Threads. That one was a big deal in my house. All right, that is what I wanted to cover today. I am proud of the progress we've made so far this year. We've got a lot more execution ahead to fulfill the opportunities ahead of us. A big thank you to all of our teams who are driving all these advances, and to all of you for being on this journey with us. And now here is Susan.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q1 total revenue was $36.5 billion, up 27% on both a reported and constant currency basis. Q1 total expenses were $22.6 billion, up 6% compared to last year. In terms of the specific line items, cost of revenue increased 9%, as higher infrastructure-related costs were partially offset by lapping Reality Labs' inventory-related valuation adjustments. R&D increased 6%, driven mostly by higher headcount-related expenses and infrastructure costs, which were partially offset by lower restructuring costs. Marketing and sales decreased 16%, due mainly to lower restructuring costs, professional services, and marketing spend. G&A increased 20%, as higher legal-related expenses were partially offset by lower restructuring costs. We ended the first quarter with over 69,300 employees, up 3% from Q4. First quarter operating income was $13.8 billion, representing a 38% operating margin. Our tax rate for the quarter was 13%. Net income was $12.4 billion, or $4.71 per share. Capital expenditures, including principal payments on finance leases, were $6.7 billion, driven by investments in servers, data centers, and network infrastructure. Free cash flow was $12.5 billion. We repurchased $14.6 billion of our Class A common stock and paid $1.3 billion in dividends to shareholders, ending the quarter with $58.1 billion in cash and marketable securities and $18.4 billion in debt. Moving now to our segment results. I'll begin with our Family of Apps segment. Our community across the Family of Apps continues to grow, with approximately 3.2 billion people using at least one of our Family of Apps on a daily basis in March. Q1 total Family of Apps revenue was $36 billion, up 27% year over year. Q1 Family of Apps ad revenue was $35.6 billion, up 27%, or 26% on a constant currency basis. Within ad revenue, the online commerce vertical was the largest contributor to year-over-year growth, followed by gaming and entertainment and media. On a user geography basis, ad revenue growth was strongest in Rest of World and Europe at 40% and 33% respectively. Asia Pacific grew 25% and North America grew 22%. In Q1, the total number of ad impressions served across our services increased 20%, and the average price per ad increased 6%. Impression growth was mainly driven by Asia Pacific and Rest of World. Pricing growth was driven by advertiser demand, which was partially offset by strong impression growth, particularly from lower monetizing regions and surfaces. Family of Apps other revenue was $380 million in Q1, up 85%, driven by business messaging revenue growth from our WhatsApp business platform. We continue to direct the majority of our investments toward the development and operation of our Family of Apps. In Q1, Family of Apps expenses were $18.4 billion, representing approximately 81% of our overall expenses. Family of Apps expenses were up 7%, due mainly to higher legal and infrastructure costs that were partially offset by lower restructuring costs. Family of Apps operating income was $17.7 billion, representing a 49% operating margin. Within our Reality Labs segment, Q1 revenue was $440 million, up 30%, driven by Quest headset sales. Reality Labs expenses were $4.3 billion, down 1% year over year, as higher headcount-related expenses were more than offset by lapping inventory-related valuation adjustments and restructuring costs. Reality Labs operating loss was $3.8 billion. Turning now to the business outlook. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we remain pleased with engagement trends and have strong momentum across our product priorities. Our investments in developing increasingly advanced recommendation systems continue to drive incremental engagement on our platforms, demonstrating that people are finding added value by discovering content from accounts they're not connected to. The level of recommended content in our apps has scaled as we've improved these systems, and we see further opportunity to increase the relevance and personalization of recommendations as we advance our models. Video also continues to grow across our platform, and it now represents more than 60% of time on both Facebook and Instagram. Reels remains the primary driver of that growth, and we're progressing on our work to bring together Reels, longer-form video, and live video into one experience on Facebook. In April, we rolled out this unified video experience in the US and Canada, which is increasingly powered by our next generation ranking architecture that we expect will help deliver more relevant video recommendations over time. We're also introducing deeper integrations of generative AI into our apps in the US and more than a dozen other countries. Along with using Meta AI within our chat surfaces, people will now be able to use Meta AI in search within our apps, as well as feed in groups on Facebook. We expect these integrations will complement our social discovery strategy, as our recommendation systems help people to discover and explore their interests, while Meta AI enables them to dive deeper on topics they're interested in. Threads also continues to see good traction as we continue to ship valuable features and scale the community. Now to the second driver of our revenue performance, increasing monetization efficiency. There are two parts to this work. The first is optimizing the level of ads within organic engagement. Here, we continue to advance our understanding of users' preferences for viewing ads to more effectively optimize the right time, place, and person to show an ad to. For example, we are getting better at adjusting the placement and number of ads in real time based on our perception of a user's interest in ad content and to minimize disruption from ads, as well as innovating on new and creative ad formats. We expect to continue that work going forward, while surfaces with relatively lower levels of monetization, like video and messaging, will serve as additional growth opportunities. The second part of improving monetization efficiency is enhancing marketing performance. Similar to our work with organic recommendations, AI is playing an increasing role in these efforts. First, we are making ongoing ads modeling improvements that are delivering better performance for advertisers. One example is our new ads ranking architecture, Meta Lattice, which we began rolling out more broadly last year. This new architecture allows us to run significantly larger models that generalize learnings across objectives and surfaces in place of numerous smaller ad models that have historically been optimized for individual objectives and surfaces. This is not only leading to increased efficiency as we operate fewer models, but also improving ad performance. Another way we're leveraging AI is to provide increased automation for advertisers. Through our Advantage Plus portfolio, advertisers can automate one step of the campaign setup process, such as selecting which ad creative to show, or automate their campaign completely using our end-to-end automation tools, Advantage Plus Shopping and Advantage Plus App Ads. We're seeing growing use of these solutions, and we expect to drive further adoption over the course of the year while applying what we learn to our broader ads investments. Next, I'd like to discuss our approach to capital allocation. We continue to see compelling investment opportunities to both improve our core business in the near term and capture significant longer-term opportunities in generative AI and Reality Labs. As we develop more advanced and compute-intensive recommendation models and scale capacity for our generative AI training and inference needs, we expect that having sufficient infrastructure capacity will be critical to realizing many of these opportunities. As a result, we expect that we will invest significantly more in infrastructure over the coming years. Our other long-term initiative that we're continuing to make significant investments in is Reality Labs. We are also starting to see our AI initiatives increasingly overlap with our Reality Labs work. For example, with Ray-Ban Meta smart glasses, people in the US and Canada can now use our multimodal Meta AI assistant for daily tasks without pulling out their phone. Longer term, we expect generative AI to play an increasing role in our mixed reality products, making it easier to develop immersive experiences. Accelerating our AI efforts will help ensure we can provide the best version of our services as we transition to the next computing platform. We expect to pursue these opportunities while maintaining a focus on operating discipline, and we believe our strong financial position will allow us to support these investments while also returning capital to shareholders through share repurchases and dividends. In addition, we continue to monitor an active regulatory landscape, including the increasing legal and regulatory headwinds in the EU and the US that could significantly impact our business and our financial results. We also have a jury trial scheduled for June in a suit brought by the state of Texas regarding our use of facial recognition technology, which could ultimately result in a material loss. Turning now to the revenue outlook. We expect second quarter 2024 total revenue to be in the range of $36.5 to $39 billion. Our guidance assumes foreign currency is a 1% headwind to year-over-year total revenue growth based on current exchange rates. Turning now to the expense outlook. We expect full year 2024 total expenses to be in the range of $96 to $99 billion, updated from our prior outlook of $94 to $99 billion due to higher infrastructure and legal costs. For Reality Labs, we continue to expect operating losses to increase meaningfully year over year due to our ongoing product development efforts and our investments to further scale our ecosystem. Turning now to the CapEx outlook. We anticipate our full year 2024 capital expenditures will be in the range of $35 to $40 billion, increased from our prior range of $30 to $37 billion, as we continue to accelerate our infrastructure investments to support our AI roadmap. While we are not providing guidance for years beyond 2024, we expect CapEx will continue to increase next year as we invest aggressively to support our ambitious AI research and product development efforts. On to tax. Absent any changes to our tax landscape, we expect our full year 2024 tax rate to be in the mid-teens. In closing, Q1 was a good start to the year. We're seeing strong momentum within our family of apps and are making important progress on our longer-term AI and Reality Labs initiatives that have the potential to transform the way people interact with our services over the coming years. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Eric Sheridan from Goldman Sachs. Please go ahead.
Thank you so much for taking the questions. Maybe I'll ask a two-parter. Mark, you used the analogy of other investment cycles you've been through around products like Stories and Reels. I know you're not giving long-term guidance today, but using those analogies, how should investors think about the length and depth of this investment cycle with respect to either AI and or Reality Labs more broadly and mixed reality? And you both talked about the impact AI is having on the advertising ecosystem. What are you watching for in terms of adoption or utility on the consumer side to know that AI adoption is tracking along with the investment cycle? Thank you.
Yeah, in terms of the timing, I think it's somewhat difficult to extrapolate from previous cycles, but I guess like the main thing that we see is that we will usually take, I don't know, a couple of years, if it just, I mean, it could be a little more, could be less, to focus on building out and scaling the products. And we typically don't focus that much on monetization of the new areas until they reach significant scale, because it's so much higher leverage for us just to improve monetization on other things before these new products are at scale. So you enter this period where I think kind of smart investors see that the product is scaling and that there's a clear monetizable opportunity there, even before the revenue materializes. And I think we've seen that with Reels and with Stories and with the shift to mobile and all these things, where basically we build out the inventory first for a period of time, and then we monetize it. And during that time when it's scaling, it's sometimes it's not just the case that we're not making money from that thing. It can often actually be the case that it displaces other revenue from other things. So like you saw with Reels, it scaled, and there was a period where it was not profitable for us as it was scaling before it became profitable. So I think that's more the analogy that I'm making on this. But I think it's what that suggests is that what we should all be focused on for the next period is as the consumer products scale, Meta AI really just launched in a meaningful way, so we don't have any kind of hard stats to share on that. But I'd say that's the main thing that I'm focused on for this year and probably a lot of next year is growing that product and the other AI products and the engagement around them. And I think we should all have quite a bit of confidence that if those are on a good track to scale, then they're going to end up being very large businesses. So that's the main point that I was trying to make there.
Your next question comes from the line of Brian Nowak from Morgan Stanley. Please go ahead.
Great. Thanks for taking my questions. I have two. The first one is on sort of the recommendation engine improvements, and even Susan, when you talked about further opportunities to increase the relevance of the models. Could you just unpack that a little bit for us? Can you give us examples of where you're still running the model in a suboptimal basis, or opportunities for improved signal capture use or data you're not using? Where are sort of the areas of improvement you see from here? And then the second one, when you talk about driving incremental adoption of AI tools for advertisers, what are sort of some of the main gating factors you've encountered to get advertisers to test these tools, and how do you think about sort of addressing that throughout 24 and 25? Thanks.
Thanks, Brian. So to your first question, where are there more opportunities for us to leverage and improve our recommendations models to drive engagement? One of the things I would say is historically, each of our recommendation products, including Reels, in-feed recommendations, et cetera, has had their own AI model. And recently, we've been developing a new model architecture with the aim for it to power multiple recommendations products. We started partially validating this model last year by using it to power Facebook Reels, and we saw meaningful performance gains, 8 to 10% increases in watch time, as a result of deploying this. This year, we're actually planning to extend the singular model architecture to recommend content across not just Facebook Reels, but also Facebook's video tab as well. So while it's still too early to share specific results, we're optimistic that the new model architecture will unlock increasingly relevant video recommendations over time, and if it's successful, we'll explore using it to power other recommendations. An analog exists, I would say, on the ad side. We've talked a little bit about the new model architecture at Meta Lattice that we deployed last year that consolidates smaller and more specialized models into larger models that can better learn what characteristics improve ad performance across multiple surfaces like feed and Reels and multiple types of ads and objectives at the same time. And that's driven improved ad performance over the course of 2023 as we deployed it across Facebook and Instagram to support multiple objectives. And over the course of 2024, we expect to further enhance model performance and include support for even more objectives like web and app and ROAS. So there's a lot of work that we're investing in the underlying model architecture for both organic engagement and ads that we expect is going to continue to deliver increasing ads performance over time. The second question you asked was around getting advertisers to test and adopt Gen AI tools. There are two flavors of this. The more near-term version is around the Gen AI ad creative features that we have put into our ads creation tools. And it's early, but we're seeing adoption of these features across verticals and different advertiser sizes. In particular, we've seen outsized adoption of image expansion with small businesses, and this will remain a big area of focus for us in 2024. And I expect that improvements to our underlying foundation models will enhance the quality of the outputs that are generated and support new features on the roadmap. But right now, we have features supporting text variations, image expansion, and background generation, and we're continuing to work to make those more performant for advertisers to create more personalized ads at scale. The longer term piece here is around business AIs. We have been testing the ability for businesses to set up AIs for business messaging that represent them in chats with customers. starting by supporting shopping use cases, such as responding to people asking for more information on a product or its availability. So this is very, very early. We've been testing this with a handful of businesses on Messenger and WhatsApp, and we're hearing good feedback with businesses saying that the AIs have saved them significant time, while consumers noted more timely response times. And we're also learning a lot from these tests to make these AIs more performant over time as well. So we'll be expanding these tests over the coming months, and we'll continue to take our time here to get it right before we make it more broadly available.
Your next question comes from the line of Mark Shmulik from Bernstein Research. Please go ahead.
Yes, hi. Thanks for taking the question. I guess back to that product playbook that we've talked about a few times, with kind of Reels now such a large share of kind of time spent on Instagram and Facebook, how do we think about the next leg of kind of monetization growth from here? In particular, as we kind of get back to kind of shopping on platform or other ways to monetize. Any color there on the roadmap, kind of just beyond ad insertion from here? And then, Susan, just on the ad market in particular, previously we've heard a lot about kind of Chinese-based advertiser contribution. Any color you could share there on kind of how that spend is trending? Thank you.
Sure. Thanks, Mark. So Reels revenue continued to grow across Instagram and Facebook in Q1, and that's driven both by higher engagement and increased monetization efficiency through our ads ranking and delivery improvements. And as we've mentioned before, we don't plan on quantifying the impact from Reels going forward, but it remains a positive contributor to overall revenue. And we expect that there are going to be opportunities for us to continue improving performance and growing supply. So on the performance improvements, we are investing in ongoing ranking improvements. We're continuing to make ads easier and more intuitive to interact with through work like optimizing call to actions and post-click experiences, which are especially important for DR performance. And we're also optimizing ads to feel more native to Reels. In Q1, we rolled out our Gen AI image expansion tools across Facebook and Instagram Reels after having introduced it to Instagram Feed in Q4, and we're seeing, again, outsized adoption with small businesses. So we're excited about the opportunities to continue making these ads more performant. And even though the Reels ad load, has increased over the last year, it remains lower on a per-time basis than both Feed and Stories. So we're going to continue to look for opportunities to thoughtfully grow it in the future and invest in creative ways to address the structural supply constraints of the Reels format being more video heavy, including higher density experiences and formats, and increasingly personalizing ad loads, which we think will make sure that we're really putting ads in front of people when they're most likely to be interested and engage with them. The second question you asked was around China. Growth in spend from China advertisers remained strong in Q1. This was driven by online commerce and gaming, and it's reflected in our Asia Pacific advertiser segment, which remained the fastest growing region at 41% year over year in Q1. Now, we did see strength across other geographies as well, including a 6-point acceleration in total revenue growth from North America advertisers. So, I would say that, we aren't quantifying the Q1 contribution from China, and we don't have forward-looking expectations to share on quarterly China-based ad revenue. But I will say that, we are lapping periods of increasingly strong demand over the course of 2024, given the recovery of China-based advertisers in 2023 from their prior pandemic-driven headwinds.
Your next question comes from the line of Doug Anmuth from JP Morgan. Please go ahead.
Thanks for taking the questions. Can you just talk about what's changed most in your view in the business and the opportunity now versus 3 months ago? And is there anything you're more cautious about in revenue in the ad market? And is the AI opportunity just even bigger and therefore requiring more investment than expected? And then, Susan, can you also just comment on how you're thinking about that ability to sustain growth rates over the next few quarters as you face tougher comps off a big base of ad dollars? Thanks.
Yeah, I can speak to the first one. I think we've gotten more optimistic and ambitious on AI. So previously, I think that our work in this. I mean, when you were looking at last year, or we released Llama 2, we were very excited about the model and thought that that was going to be the basis to be able to build a number of things that were valuable that integrated into our social products. But now I think we're in a pretty different place. So with the latest models, we're not just building, good AI models that are going to be capable of building some new good social and commerce products. I actually think we're in a place where we've shown that we can build leading models and be the leading AI company in the world. And that opens up a lot of additional opportunities beyond just ones that that are the most obvious ones for us. So that's this is what I was trying to refer to in my opening remarks, where I just view the success that we've seen with the way that Llama 3 and Meta AI have come together as a real validation technically that we have the talent, the data, and the ability to scale infrastructure to do leading work here. And with Meta AI, I think that we are on our path to having Meta AI be the most used and best AI assistant in the world, which I think is going to be enormously valuable. So all of that basically encourages me to make sure that we're investing to stay at the leading edge of this. And we're doing that at the time when we're also scaling the product before it is making money. So that's the analogy that I was making before, which is, we've gone through some of those cycles before. But fundamentally, I think if you look at the facts of what our team is able to produce, I think it just, our optimism and ambition have just grown quite a bit, and I think that this is just going to end up being quite an important set of products for us. It was already going to be. Now I think it has the potential to be even more important.
And I can take that second question, Doug. So, we aren't giving full year 2024 guidance, and obviously our revenue for the full year will be influenced by, many factors, including macro conditions and things that are harder to predict the further out you go. And of course, over the course of 2024, we will also be lapping periods of increasingly strong demand. With that said, we expect to see good opportunities to continue growing engagement across our products, driven by the investments we made in AI-based content recommendations, our ongoing video work, and we also expect that we will continue to drive ads performance gains and continue to make our ads sort of more effective and deliver increasing value to advertisers. One thing I'd share, for example, is that we actually grew conversions at a faster rate than we grew impressions over the course of this quarter. So, we're expecting to, which basically suggests that our conversion rate is growing and is one of the ways, in which our ads are becoming more performant. So I feel like there's a lot of opportunity for us, both with our organic engagement growth and with continuing to make the ads better and to continue driving more results for advertisers.
Your next question comes from the line of Justin Post from Bank of America. Please go ahead.
Great, thank you. First on the CapEx, mostly, you're kind of talking about an investment cycle here. Is there any way you could kind of use some of the metaverse spend over into AI, or are they converging, and kind of use some of the money from the other areas to kind of fund the AI? And then second, longer term investors are very focused on returns on capital. Obviously, great returns on CapEx in the past with your margins today. How do we think about the returns on the capital you're spending? How are you thinking about it, I guess, going forward, 2-3 years out? Thank you.
So, on the, I would say, well, I can start with the second part, and then I'll defer to Mark on the first one. In terms of measuring the ROI on our CapEx investments, we've broadly categorized our AI investments into two buckets. I think of them as sort of core AI work and then strategic bets, which would include Gen AI and the advanced research efforts to support that. And those are just really at different stages as it relates to being able to measure the return and drive revenue for our business. So with our core AI work, we continue to have a very ROI-driven approach to investment, and we're still seeing strong returns as improvements to both engagement and ad performance have translated into revenue gains. Now, the second area, strategic bets is where we are much earlier. Mark has talked about the potential, that we believe we have to create significant value for our business in a number of areas, including, opportunities to build businesses that don't exist on us today. But we'll need to invest ahead of that opportunity to develop more advanced models and to grow the usage of our products before they drive meaningful revenue. So while there is tremendous long-term potential, we're just much earlier on the return curve than with our core AI work. What I'll say, though, is we're also building our systems in a way that gives us fungibility in how we use our capacity so we can flex it across different use cases as we identify, what are the best opportunities to put that infrastructure toward.
Sure. And then on the question of shifting resources from other parts of the company, I would say broadly we actually are doing that in a lot of places in terms of shifting resources from other areas, whether it's compute resources or different things, in order to advance the AI efforts. For Reality Labs specifically, I'm still really optimistic about building these new computing platforms long term. I mentioned in my remarks up front that one of the bigger areas that we're investing in Reality Labs is glasses. We think that that's going to be a really important platform for the future. Our outlook for that, I think, has improved quite a bit, because previously we thought that would need to wait until we had these full holographic displays to be a large market. And now we're a lot more focused on the glasses that we're delivering in partnership with Ray-Ban, which I think are going really well. And so that, I think, has the ability to be a pretty meaningful and growing platform sooner than I would have expected. So it is true that more of the Reality Labs work, like I said, is sort of focused on the AI goals as well. But I still think that we should focus on building these long-term platforms too.
Your next question comes from the line of Youssef Squali from Truist Securities. Please go ahead.
Great, thank you very much. Mark, with the upcoming ban or sale of TikTok signing into law earlier today, how do you think that will impact the U.S. social media landscape and Meta in particular? And what do you say to people who believe that this is potentially a slippery slope in terms of the government picking with winners and losers? And Susan, how big is Advantage Plus in terms of the spend on the platform and just in terms of its impact on overall CPM stabilizing? Thank you very much.
Thanks, Youssef. We've obviously been following the events related to TikTok closely, but at this stage, it is just too early, I think, to assess its impact or what it would mean for our business. To your second question on Advantage Plus, we're continuing to see good traction across our Advantage Plus portfolio, including both with solutions, I mentioned this, that automate individual steps of the campaign creation setup, as well as ones that automate, the full end-to-end process. So on the single step automation, Advantage Plus Audience, for example, has seen significant growth in adoption since we made it the default audience creation experience for most advertisers in Q4. And that enables advertisers to increase campaign performance by just using audience inputs as a suggestion rather than a hard constraint. And based on tests that we've ran, campaigns using Advantage Plus Audience targeting saw, on average, a 28% decrease in cost per click or per objective compared to using our regular targeting. On the end-to-end automation products like Advantage Plus Shopping and Advantage Plus App Campaigns, we're also seeing very strong growth. Mark mentioned the combined revenue flowing through those two has more than doubled since last year. And we think there's still significant runway to broaden adoption. So we're trying to enable more conversion types for Advantage Plus Shopping. In Q1, we began expanding the list of conversions that businesses could optimize for. So previously, it only supported purchase events, and now we've added 10 additional conversion types. And we're continuing to see strong adoption now across verticals. Really, I would say we are building a lot more functionality into the Advantage Plus tools over time. It's also where a lot of our Gen AI ads creative features have been introduced, and where advertisers, have the opportunity to experiment with those. And we'll keep looking to apply what we learn from these products more broadly to our ads investments over the course of the year.
Your next question comes from the line of Ken Grolowski from Wells Fargo. Please go ahead.
Thank you very much. As you look out through the coming period of product investment, how should we think about the relationship between Family of Apps revenue and cost growth? Is there any insight you can give us there? And then maybe just one that's a little bit more specific to the G&A growth in 1Q. You called out legal expenses. Just wanted to see if there's anything one time in there that would cause the elevated growth in 1Q. Thank you.
Yeah, on the second part of your question first, so on the G&A side, that was really driven, by legal expenses. We recognized some accruals in Q1 related to ongoing legal matters, and you'll see more detail on that in the 10Q. On the first part of your question, which is really about sort of the kind of long-term, margin profile of Family of Apps, we aren't giving guidance on that per se, but one of the things that, we really have been very disciplined about, over the course of 2023 and continuing is really operating the business in a very efficiency-oriented way. So we're being very disciplined with allocation of new resources. This is a muscle that we really built over 2023 that we believe is important for us to keep carrying forward, and I think you'll see us continue to emphasize that, especially with, the Family of Apps business being at the scale that it is.
Your next question comes from the line of Ross Sandler from Barclays. Please go ahead.
Great. Mark, you partnered with Google and Bing for Meta AI, organic search citations. So I guess stepping back, do you think that Meta AI longer term could bring in search advertising dollars at some point? Or do you view this as what others are doing, where you kind of attach a premium subscription tier once people kind of, get going on it? And then the second question is, you mentioned that you guys are working on building AI tools for businesses and creators. So just, I guess, how do you see the business model evolving when we all get to this stage of interacting with something like Taylor Swift's custom AI for merchandise or tickets or something like that? How's that going to play out? Thank you.
All right. So yeah, on the Google and Microsoft partnerships, yeah, I mean, we work with them to have real-time information in Meta AI. It's useful. I think it's pretty different from search. We're not working on search ads or anything like that. I think this will end up being a pretty different business. I do think that there will be an ability to have ads and paid content in Meta AI interactions over time, as well as people being able to pay for whether it's bigger models or more compute or some of the premium features and things like that. But that's all very early in fleshing out. The thing that I actually think is probably the biggest clear opportunity is all the work around business messaging. That's in addition to the stuff that we're already doing, just generate to increase engagement and ads quality in the apps. But the business messaging thing, I mean, whether it's a creator or one of the 100+ million businesses on our platform, we basically want to make it very easy for all of these folks to set up an AI to engage with their community. For a business, it's going to be able to do sales and commerce and customer support. And I think it'll be similar for creators, although there will be more of a kind of just fun and engaging part there. But a lot of creators are on the platform because they see this as a business too, whether they're trying to sell concert tickets or products or whatever it is that their business goal is. And a lot of these folks either aren't advertising as much as they could, or in business, the business messaging parts I think are still relatively under monetized compared to where they will be. And I think a lot of that is because the cost of engaging with people in messaging is still very high. But AI should bring that down just dramatically for businesses and creators. And I think that that has the potential. That's probably the beyond just increasing engagement and increasing the quality of the ads. I think that that's probably one of the nearer term opportunities. Even though that will it's not like a next quarter or the quarter after that scaling thing, but that's not like a 5-year opportunity either. So I think that is one that I think is going to be pretty exciting to look at. But yeah, I mean, as Meta AI scales too, I think that will have its own opportunities to monetize, and we'll build that out over time. But like I tried to emphasize, we're in the phase of this where the main goal is getting many hundreds of millions or billions of people to use Meta AI as a core part of what they do. That's the kind of next goal, building something that is super valuable. We think this has the potential to be at a very large scale, and that's sort of the next step on the journey.
Krista, we have time for one last question.
And that question comes from the line of Ron Josey from Citi. Please go ahead.
Great, thanks for taking the question. Mark, I wanted to follow up on a prior question that you mentioned. Optimism has grown internally quite a bit just with all the improvements and investments and innovations you're making. And we're seeing that in the experience just for the few days of Meta AI. So can you just talk to us maybe how the 400 billion parameter model just might evolve the experience on Meta, or how you think things might change over the next, call it, months, years, et cetera, as maybe messaging becomes a greater focus and things along those lines. So just a vision longer term. Thank you.
Yeah, I mean, I think that the next phase for a lot of these things are handling more complex tasks and becoming more like agents rather than just chatbots, right? So when I say chatbot, what I mean is you send it a message and it replies to your message, right? So it's almost like almost a one-to-one correspondence. Whereas what an agent is going to do is you give it an intent or a goal, and it goes off and probably actually performs many queries on its own in the background in order to help accomplish your goal. Whether that goal is researching something online or eventually finding the right thing that you're looking to buy. There's a lot of complexity in sort of different things that I think people don't even realize that they will be able to ask computers to do for them. And I think basically the larger models and then the more advanced future versions that will be smaller as well are just going to enable much more interesting interactions like that. So, I mean, if you think about this, I mean, even some of the business use cases that we talked about, you don't really just want like a sales or customer support chatbot that can just respond to what you say. If you're a business, you have a goal, right? You're trying to support your customers well, and you're trying to position your products in a certain way and encourage people to buy certain things that map to their interests and what they'd be interested in. And that's more of like a multi-turn interaction, right? So the type of business agent that you're going to be able to enable with just a chatbot is going to be very naive compared to what we're going to have in a year even. But beyond that too is just the reasoning and planning abilities of these things grow to be able to just help guide people through the business process of engaging with whatever your goals are as a creator or a business. So I think that that's going to be extremely powerful, and I think the opportunity is really big. So. And on top of that, I think what we've shown now is that we have the ability to build leading models in our company. So, so I think it makes sense to go for it, and we're going to, and I think it's going to be a really good long-term investment. But I did just want to spell out on this call today the extent to which we're focusing on this and investing in this for the long term, because that's what we do.
Great. Thank you for joining us today. We appreciate your time, and we look forward to speaking with you again soon.
This concludes today's conference call. Thank you for your participation.
So quick thoughts on the call, then I'm going to jump as well. I'm not too impressed. I think that this is a company that's leaning far too much into the idea of being able to monetize AI without having a clear roadmap as to how that happens. They're talking about years to come of, higher than expected spend in this. And I think it's giving investors metaverse flashbacks. And then Zuck also even tried to tie it right into the metaverse. So I'd be a little bit concerned as a meta investor. Of course, the stock is down significantly. We talked about that gap fill lower potential before the call started, before earnings came out. Just a reminder, if you hadn't seen it or if you did see this chart, we came back and we actually hit a level even below here. We went just below 400. So we did see that entire area, that worst case scenario reaction already play out after hours. And it's likely to see that kind of play out during the regular session as well. So thanks for joining me for Meta. We'll be back tomorrow to cover more earnings after hours and also talk more during the trading day about markets and mayhem. This has been me, Markets and Mayhem from Traderade.